Most risk assets in general generally do better in rising liquidity environments versus falling liquidity environments. That's not really rocket science. But Bitcoin, from what I've looked, is more correlated with liquidity than most other assets are, because other things that are more noise inducing, like things like earnings, or things being defensive assets, like perhaps gold, where you might go into it, ironically, on a lower liquidity environment compared to stocks. So Bitcoin, being both perceived as a risk-on asset with no earnings and finite supply, has historically, at least in the kind of the second half of its life cycle, where it's been big enough to be a macro asset, has been highly correlated with global liquidity.
Bitcoin remains in positive territory as the pioneering cryptocurrency strives to reach a new all-time high, bouncing back from the challenges faced in 2022. The resurgence in Bitcoin's value is concurrently fueling an uptick in the number of millionaire holders. As of November 12, the count of Bitcoin millionaires stands at 88,210, reflecting a substantial increase of 6,544 from the 28,084 reported on January 5, based on data obtained by Finbull. This surge in Bitcoin millionaires represents a remarkable threefold increase in 2023, marking a notable 25% growth. According to Lyn Alden, Bitcoin faced challenges during the low liquidity phase but not only persevered but is now thriving in the high liquidity phase. This resilience underscores Bitcoin's superiority over other asset classes. In an upcoming discussion, Alden delves into Bitcoin from a macro perspective, exploring topics such as Bitcoin mining and the potential impact of energy prices on the cryptocurrency's mining activities.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
Few different models or correlations with what contributes to Bitcoin price action. And like you said, basically, in one sense, we want to make it so the price doesn't matter. But when you're doing a lot of CapEx, or when you're managing a portfolio, obviously price matters in various time frames, even if you don't really want to be a trader. And there's obviously been a lot of focus on the halving over time. So historically, halvings on the 4-year cycle, and the bull markets generally come after the halving. But there are some things that have historically been more correlated with Bitcoin price than the halving. And the one that kind of stands out from my research is global liquidity conditions, which is basically a fancy way of saying global broad money supply in dollar terms, right? So there's two main components of that. So there's one is how much money printing or bank lending is happening on a global basis, especially among the top 10 currencies or so. And then the second major factor there would be, is the dollar strengthening markedly compared to other major currencies. So generally, Bitcoin is challenged in a low liquidity environment and doing well in a high liquidity environment. And in terms of both correlation and causation, it makes sense, because as a finite supply money, you'd expect it to do pretty well when you have supply inflation of global currency, which is basically a predecessor to CPI and a more direct link to inflation than just the lagging effects of prices. And then in a correlate variable, so the challenge is that most risk assets in general generally do better in rising liquidity environments versus falling liquidity environments. That's not really rocket science. But Bitcoin, from what I've looked, is more correlated with liquidity than most other assets are, because other things that are more noise inducing, like things like earnings, or things being defensive assets, like perhaps gold, where you might go into it, ironically, on a lower liquidity environment compared to stocks. So Bitcoin, being both perceived as a risk-on asset with no earnings and finite supply, has historically, at least in the kind of the second half of its life cycle, where it's been big enough to be a macro asset, has been highly correlated with global liquidity. And I think that's one of the key things you have to look at going forward. And I think a lot of the metrics point towards kind of continued consolidation for a little while, at least in that liquidity indicator. And then as you look out a couple years, I would expect another sharply rising liquidity cycle, because there's only so long that you can maintain this sort of like poor liquidity environment before things break, things get rough, things decelerate, and then you have another round of higher liquidity.
Hut 8, a listed Bitcoin mining company, has obtained court approval to submit a stalking horse bid for a bankrupt firm's assets. This bid, arranged in advance of an auction, serves as an effective reserve bid for a series of natural gas power plants and a Bitcoin mining site situated in North Bay, Ontario. If successfully completed, this acquisition could potentially resolve the ongoing legal dispute between Hut 8 and Validus Power Corporation, Hut 8's power provider. Validus Power Corporation was sued in January for alleged non-compliance with a power purchase agreement to provide 100 megawatts to Hut 8 facilities. The acquisition, if finalized, includes a 40-megawatt facility in Cuzcasing, a 110-megawatt facility in Kingston, a 120-megawatt facility in Aricos Falls, and a 40-megawatt facility in a Bitcoin mining site in North Bay. This strategic move is expected to significantly bolster Hut 8's capacity to construct self-sufficient Bitcoin facilities, eliminating the reliance on external companies for the necessary power to operate them. In an upcoming discussion, Lyn Alden will share her insights on energy dynamics and how they impact Bitcoin mining and miners.
Oil is fairly fungible around the world unless it's uniquely isolated. It's fairly lower cost to transport it compared to get out of the ground. Whereas natural gas, because it's a lot more costly to transport, you either need a pipeline or liquid cooling for long distances. That makes the European gas market and the North American gas market can be completely different, like zip codes in terms of price, because there's a limited capacity to arbitrage that gap. And so, given the lack of export capacity you had, North American, gas is kind of low. I think the next few months, it's really unclear because we have, kind of still decelerating economic indicators. Well, I think a lot of people overstate how much, say, oil is likely to suffer if we do get an outright recession. And that's because they kind of think back to the last two recessions. It's always recency bias. So 2020, obviously, oil went negative in some, futures and things like that because that was the biggest ever oil drop demand ever because it was a unique situation, not a normal recession. And then the one before that was the Great Recession, so one of the largest ever drawdowns in energy usage. Whereas when you look back over the past 50 plus years, there's only been like 5 years where global energy demand has diminished in any way. 3 of those years were in the early 1980s, right after the Volcker spike and the big dollar run that eventually led to the Plaza Accord. And then the other 2 were 2009 and 2020. When you look at recessions like the dot-com recession and other kind of more mild recessions, which again you shouldn't judge just by the equity market, but by the actual indicators of the recession, oil is usually kind of choppy, weak for a little bit, and then recovers. And when we look at the tightness in the oil market, when we look at just overall energy kind of constraints, we already see kind of U.S. shale drilling is sort of the leading indicators are not constructive for like a continued growth and rapid supply. I would generally take the over on energy in most cases. I'm going to fade generally, whenever it has a bull run, people start kind of like, thinking it's going to go up to 120 right away. I generally fade those types of calls, but I think it's going to be stickier to the upside. And so I would generally keep taking the over on energy prices on a global basis, unless you can find very specific areas where it's stranded. There's other constraints involved, and there's all these unintuitive things. Like you can have Europe with an energy crisis at one point, and then everybody floods the market with it, and then energy prices collapse. So you get these weird gyrations. But I'm going to keep leaning into the kind of the view that energy prices are sticky.
Moody's has recently revised the U.S. credit rating outlook from stable to negative, sparking speculation about Bitcoin's potential role as a haven asset for investors aiming to safeguard against risks associated with a weakening U.S. economy. Moody's investor service cites factors such as substantial fiscal deficits, declining debt affordability, and ongoing political polarization in the U.S. Congress as reasons behind the potential downgrade of the country's top credit rating. While the U.S. currently holds an AAA rating, Moody's downgrade underscores growing concerns about the government's increasing debt and its challenges in managing fiscal responsibilities without implementing spending cuts or revenue increases. Moody's decision follows the August downgrade of the U.S. sovereign rating by Fitch, one of the 3 major global rating agencies, after months of political tension surrounding the U.S. debt ceiling. William Foster, Moody's senior vice president, notes that a substantial policy response to address the declining fiscal strength is unlikely until 2025, primarily due to political constraints. The revised U.S. credit outlook coincides with heightened fiscal scrutiny amid rising national debt levels and political disagreements hindering budgetary agreements. This situation has led to speculation that Bitcoin could serve as a haven asset for investors seeking to hedge against potential risks associated with a deteriorating U.S. economy. Despite Bitcoin's price volatility, its decentralized nature and limited supply make it an appealing choice for portfolio diversification and a hedge against inflation and economic risks. Share your thoughts in the comments below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.